market's come down quite a bit with a lot of FUD around Silvergate as well as Silicon Valley Bank, but chances are if you've been playing around with one of these real yield pools, half your assets are in a stablecoin anyway, so that would mean that your losses haven't been too great over the past few days. What's going on, everyone? Welcome back to the Banking Analyst channel. Today we're going to be returning back to the Retire on Crypto series, where we'll be discussing how much you actually need in order to retire on Binance BNB chain. We'll be talking about the projects that offer this type of yield and looking at the risk level of that particular project, and then finally moving on into the verdict on how much you actually need in order to retire or generate a sustainable passive income off of the Binance BNB chain. Let's jump right into today's video. First of all, let's get the first point out of the way. The project that we're talking about has been mentioned several times on this channel, so I will not dwell too much on it. This is a GMX fork called El Dorado Exchange. They have these ELP tokens which function exactly the same as the GLP tokens, and currently I am farming in the ELP1, which is the so-called top 5 ETF. This consists of Ethereum, Bitcoin, BNB, as well as Binance USD. So anyone who is holding BNB and is really a maxi in the Binance ecosystem, this could be one that you want to do, especially given how the markets are kind of unpredictable right now, and you might want to reduce the volatility with this USD exposure. So now that we've talked about the project itself, let's have a look at the farm. The farm can be found on the earn page, where you are able to stake your ELP1 by first buying it over here using any of the constituent coins and hitting this stake button over here. Then you will be paid in 2 tokens. So this is slightly different from what we saw in GMX in our previous Arbitrum related video. And once again, in today's video, we are only focusing on real yield. So this is really the only play there is so far with a decent TVL. So first we want to talk about the reward token of EUSD. EUSD is the collateralized stablecoin of El Dorado Exchange. Currently, this is close to 90% collateralized. The idea is that you are able to redeem your USD for any of this underlying collateral, as you see on the right-hand side. Now, there is currently more circulating USD than there is collateral, so you might make of that what you will. Nevertheless, this is a reward token, so this shouldn't faze us too much. All we need to do is cash out for this collateral and then claim our rewards, probably in, say, BUSD or Bitcoin. The other token that we are being rewarded in is this thing called AEDE. Now, AEDE is a vesting version of the El Dorado Finance native token, EDE. It vests over 365 days, but not to worry, there's actually a trick that you can use in order to unlock this early at discount. This can actually be done on PancakeSwap. So if I key in AEDE over here and EDE as our target token, because that's the liquidity pair that it exists in, then what we do see is that 1 EDE is 0.31 of a locked EDE. Now, judging from things like Jewel, ViperSwap, all the Harmony 1 tokens, 0.31 is a pretty good price for something that vests in a year where the outcomes of such a native token are uncertain. So this is definitely looking like a good play here. Can boost your APR by quite a bit. Now let's jump into the actual yields that are on offer and how much you actually need in order to retire on BNB chain. And we'll be looking at 2 levels of income as we did before with Arbitrum. One, if you want to retire in, say, Thailand or something where the cost of living is low, and another where you want to be able to spend slightly more. With that being said, we go back to the target income spreadsheet that we've seen from last time. It is a lot simpler this time because there's only one project we're talking about. As we see on the earn page over here, the total APR is something to be ignored because, as we said, we are going to be selling our vesting tokens at a discount. The trading fees, or EUSD APR, is supposedly 224%. Let's say we take a conservative estimate of 120%. The reason for that is because over the past month, that is what it has been averaging at. You don't want to take this super high APR as gospel, particularly because now is a time of high volatility. Nonetheless, we do also see the AEDE APR of 173%. Now, remember just now we talked about the PancakeSwap trick where we can take a factor of 0.3 on the APR, and that is exactly what we've gone ahead and done here. So 170 times 0.3 is 51%. So we want to go ahead and add that 51% onto this APR over here. And now we have our first amount, and that is for the low cost of living country that you might want to retire or live in, go on a holiday in, doesn't matter, whatever the case. Now, $2,000 a month is the number to hit. And surprisingly, we're looking at a figure that is not actually that large at all. You only need $14,000 invested into this farm right now in order to generate this kind of yield. Additionally, what we also see is this net worth tab over here, which assumes that you're only able to put 10% of your net worth into this farm because that is just good risk management. We see that $140,000 net worth would be sufficient. So that is pleasantly surprising. If we were to take the current APRs, you can add another 100 to this, and you see that the average amount you actually need drops down to just 8.8K. So this is really, really profitable right now if you want to get into this. Now, the next amount would be if we wanted to earn $6,000 a month from this farm, especially if you don't want to move to a low cost of living country. And if we swap it to 6,000, we see that the amount that you need jumps to 26.5K invested right now at today's APRs and a net worth of 265K. Now, obviously, if we reduce it back to the longer term average of 171, we do see that the net worth required increases to about 400K, while the capital needed increases to 40K. But nonetheless, this is a lot smaller than what we saw from Arbitrum, wherein last week we saw that you basically needed to be a millionaire in order to do any of this in a relatively low risk manner. But if you're still more interested in Arbitrum because it is more decentralized, supposedly it's not dependent on a centralized exchange, you can check out this video over here. So those have been the amounts that you need in order to retire or generate a decent amount of income on the Binance BNB chain. Hopefully you found this video informative and interesting. If you liked it, do leave a like down below and consider subscribing to this channel. And with that being said, thanks for watching, and I'll see you in the next one.